All right, so what is the difference between an indirect tax and a direct tax? We've got some answers coming in. Here we go. First one says, direct tax is levied directly in the income, while an indirect tax is levied at the producer of the good or service. Well done. Very good. Yeah, using the word levied, that's quite a fancy word, directly in the income, okay? Doesn't necessarily have to be income specifically, but yes. All right, good idea. Well done. Usually paid by consumers through producers for an indirect tax. Yes, absolutely. That's the Malaysian one, the sales and service tax, rather than directly to the government like an income tax. Very good, Fatima. Absolutely. Well done. Direct taxes directly paid by them. Yes, well done. Yes, absolutely, Ariane. Well done. The implementer, yes. Yes, okay. A middleman. All right, yes, good. Well done. Yeah, we're getting this now. This is good.
Sorry, Mr. David. I'm unable to join the new report. I'm not sure why. I think Sarika also says hers isn't working.
You can't join it?
Yeah, it's a 6HW7I, right? I'm not misreading
yes.
the codes.
Yes, 6HW7I.
Yeah, I've tried a few times already. It keeps saying it's invalid for some reason.
I copy that. We'll try it here. I'll post it into Meet. See if that.
Yeah.
Sarihar, it's invalid for Sarihar as well, apparently. For that. If you do it like that way, so that maybe it's the capitalization that's the problem. Like that way, and see if that works. Is that better or worse?
Trying right now.
I'm recording the session, so if need be, you'll still be able to catch up with it.
For me, it works. Thanks.
So it's working now?
For me, Sarika, it doesn't seem to work though.
Doesn't work for Sarika? Have you tried it with the lowercase like is in here? I don't know why the case is possibly an issue. Okay, right, try again. And as said, I will also post the Nearpod into the classroom as a PDF so that you've got it there as well. Okay, now income taxes, we're very familiar with those. Now, quite often your income taxes are paid on wages. There will be some countries that you pay income tax on more than just your wages. So any form of income essentially could be classified as income, so not just wages, could be income earned from sale of assets potentially, or income earned from rental income. If you're renting, if you own a property and rent it out, those sorts of ideas. So it could be any of that, right? Most countries have what's called a progressive level of income tax. There are different types of taxation structure. The first being progressive income tax. There could be what's called a regressive income tax. You'd hope not. And there could be a proportional income tax. The progressive tax is exactly as sounds. The amount that you're going to pay in tax is actually going to increase as your income rises, right? And there's varying steps that it goes through. So in theory, the higher income you earn, the more you pay in tax. And there's quite a complicated, well, it's not that complicated, but quite a scientific way that they have to design the different levels, right? Because it's like a set of stairs. So how big a gap before you reach the next level of tax, and then how long you are able to be in that level of income before you have to then pay another amount of tax. So there's a lot of design and hopefully a lot of thought that goes into the rates with regards to progressive income tax. Now, those of you who are higher level learners, you may not be surprised to know that there is an additional component to your course that you are going to have to do, and it has to do with progressive income tax, okay? One of the things you are going to be working on is you're going to be figuring out how to calculate what's called marginal tax rates and how to use marginal tax rates. That will be something we will look at in the not too distant future. Right, just to give you that bit of a heads up there. The taxation could be usually is deducted directly from your paycheck. So when you're paid, it might be in every month or basically whenever it is that you're paid. Income tax, very familiar with income taxes. There are also a whole range of what are called payroll taxes. They are taxes that get taken off of your pay, but they tend to be like a purpose-built taxation. They're taxes for a specific reason. So it could be, say, in America, they talk quite a lot about Social Security. Okay, so that's Social Security is things like pension schemes, maternity leave payments, sick leave, unemployment benefits, insurance. Though that, if you wrap all of that up into one little bundle, you would classify that as Social Security. Right? So if something happens to you, you get unwell and are unable to work, the government of that country may have a sickness payment that it can actually pay you, or if you're unemployed, an unemployment benefit. And the general term that we use for all of those as safety nets, all of those is this idea of Social Security. So when you're reading about it, particularly if it's from America, but also from one or two other countries, if they talk about Social Security taxes or social security payments, that's what they're referring to, this sort of infrastructure. Here in Malaysia, if you've been here a while, you'll probably be familiar with the idea of an EPF, right? So that is the Malaysian version of a pension scheme, right, run by the government, and it comes as a form of taxation out of your pay, but it is specifically designated to go into this particular scheme. It doesn't go to the government and then to other things that the government wants to do. It goes directly to the EPF scheme. You can also have other work-related contributions, and they will potentially be a tax that comes out of your pay but goes to something that happens that is in your job, right? So there could be all sorts of different things that apply to that. It might be a union payment. It might be an insurance payment that is specific to the work that you do, okay? There could be a whole range of things. We used to have a social fund at one of the schools that we worked at, and it was a tax basically on your pay, and every pay you would give them a certain amount of money into the social fund, and the social fund would be used kind of like this idea of a Social Security, but if somebody in the school, one of the teachers or one of the staff needed money because of an emergency sort of situation, then the school would tap into that pool of money and help them out. Or if, you know, there was some sort of celebration for a staff member, a wedding, a birth of a child, something like that, then there would be presents purchased using that amount of money. Right? They do behave like a tax, but they're not the same, obviously, as an income tax. They're a bit different.
Mr. Gibbet?
Yeah.
So, like, would this be like a percentage of your income after the income tax has been deducted, or on top of the income tax?
It depends on how each country and each employer might do it a little bit differently. So I'm trying not to give too specific examples, but, you know, so for us, we get paid, and then the government takes the tax away. Our EPF comes after that, right? So we've already paid the tax, then the EPF contribution comes out. Then there's also medical insurance costs because the school contributes to our medical insurance, but we have to pay extra for that as well, and that then goes away as well. And so there are those extras, they come after you've paid your tax. Yeah, so they're an additional cost, you know, to that. All right. Well done. Good question, though. All right. Now, so as said, those are different types of taxes. What is not a difference between payroll taxes and income taxes? What is not a difference? You must have the question there. All right, have you got answers A, B, C, and D? There should be scenarios there that you're choosing. One of those scenarios is not a difference between a payroll tax and an income tax. Okay, a couple of you answering. Remember, the descriptor is not. Why the lines go funny when I do that. All right, well done team, doing very well. Let's have a look and see what the answers are. Right, so payroll taxes do not affect the income of the worker, whereas income taxes do. Right, so that's not a difference between the two there. Now, did I see Wenhao? Is Wenhao here?
Yeah, I'm here.
Good man. I just want to make sure I've registered you properly. All right.
Did he leave?
I think he accidentally quit the call.
Do you guys want to see my plushies? Okay, I'm taking that as a yes. This is my moose. And then this is my dragon. They're both very soft.
What are their names?
This one, its name is Dino Bleep Morse.
Oh, okay.
And this one, I haven't come up with a name. Is there any name suggestions for my child?
I don't know. It looks like a Rob to me.
A Rob?
Yeah.
Isn't there a teacher called Rob?
Is it?
No. This one had a name. This one actually has a name. This one was Dino. Oh, wait, my cousin's called Dino. Anyways, I don't know what this one should be called. What's Sven in Elsa? This one is Sven. Did you just say dinner? Joel, I don't like you anymore. Oh, wait, Mr. David's recording. It's okay, Joel. I don't forgive you. So how is everybody? How's life?
Very tired. Very, very tired.
Is someone speaking?
Very tired. Oh wait, are you doing this on purpose? Okay.
Oh, I'm kidding. It's just because you want to eat my moose. My Sven.
You gotta name him Sven. Sven's a reindeer.
Good enough. So how's year 13 going, everybody? Just give me a sign. One of the three. Oh, okay. Say Marina. Everyone else, if you just want to type in the chat how your team's going, you can just say good, bad, or you can use emojis. I never know how to get emojis on my computer unless I copy and paste. Should we email Mr. David? Like, what if he didn't know he accidentally dropped out and he kept talking for a bit? And then, you know?
Oh no, yeah, you might want to email him or like Hangouts message him.
Okay. Oh, true. We'll just wait for a second.
if it's his Wi-Fi that crashed, how will he get the email?
Oh, but
But homie has data.
Maybe he has data on his phone, and maybe his email is connected to his phone.
Okay, I'll email him and say, hey sir.
where are you? Are you just talking to like your screen? That's the fear, right?
Wait, okay. Because he said he had internet problems yesterday, right? He posted, I don't know. Okay, I'm just gonna. Hi sir.
The nearport is like progressing, so I don't think he knows.
Really?
Yeah.
Yeah, it's like a question now that we have time. For. He'll notice now because we have time for
You
questions.
can put it on a question, yeah.
I think you accidentally dropped
Oh,
out
someone write in the question. Like,
Yeah, I'm doing that. I'm doing that.
the call. We're here. I don't know, alone.
I put it in the answer on the meet,
Okay.
on the new pod.
I really do want to email. I don't like emailing people.
Okay, there you go.
Hi sir.
Hi, Mr. David.
You're muted, Mr. David.
All of a sudden, I disappeared. That was weird. My internet just turned off. Why that? Right, now, I don't know, how did we get on with this now? Got some answers in? Yes, we've got some answers coming in. Good. Capital gains taxes. And what are they and how do they work was the near-pod question. Winhouse says, hello, Mr. David. Ensign says, Mr. David, you aren't in the meets. And Joel says, you left the call. Mr. David, you exited the call. Okay. So that's not really answering the question, team. But thank you all. All right. Let's move on. Just like that. Now, here's a case study. Look at this one. All right. What advantages, excuse me, can you see for Switzerland having no capital gains tax? How might it affect the Swiss banking industry? Denmark has a rate of 40%, so their capital gains tax is 40%. What are the disadvantages of that? So this is just a case study that you could see. You know, this is the possible, right? So in your exam paper where you've got quantitative analysis, this is the sort of case study sort analysis that you can expect, right? So here you've got where we're looking at Switzerland, right? And here, no capital gains tax. Obviously, New Zealand at the moment, no capital gains tax. And then these are the other countries, right, that have capital gains taxes. And the one that's specifically mentioned is Denmark, which has a rate of 40%, which is even higher than these. Quite surprised at the US having a capital gains tax that high. That's quite a big one. There's one, Ireland, 20%. Right, this should be Australia. Yes, Australia up nearly 25%. The UK up there too, and there we go, Netherlands, 25%. So, what do we think? Capital gains tax wise, if there is this capital gains tax applied, it makes it attractive for people. Yeah, we're going to say wealthy people. Apologies, it's a little pejorative, but we're going to say wealthy people to move to Switzerland. So there's an incentive there because they don't have the tax, right, the capital gains tax, then people might be encouraged to move their money in particular to Switzerland, right? And if they move themselves, then they're going to go to that country, buy lots of goods and services, and then pay those consumption taxes, right? Maybe other income taxes potentially as well. The Swiss banking industry benefits because that's where the money goes, right? And it creates an incentive to save rather than to consume. Denmark is probably faced with the opposite problem, where wealthy Danes have an incentive to move to Switzerland to avoid paying those taxes. So then they have less incentive to save rather than consume. So there's quite a lot packed within that particular case study. Now, these sorts of capital gains taxes have these incentives built into them in a way. So are they good? Are they useful? Well, they're going to provide some tax revenue for the government, but they are going to distort markets. They're going to change the incentives with regards to savings and consumption, and they may cause people to leave the country, right? And I'm going to say may, or it may just be their money. They may decide to hold their money overseas, right? Switzerland's quite famous for holding on to money, by the way.
Mr. David,
Yeah.
what is a capital gain tax?
What is it?
Yeah.
Well, if you own an asset, okay, so imagine that the easiest one to think about is owning a house, right? You have bought a house, right? And the example in the Nearpod, which may have cut out at the time, I apologize if it did. You own a house, it cost Nisa $500,000 to buy, okay? She then sells it for $600,000. She's made $100,000 on the sale, okay? Now that's an income. The government would then classify that as an income. So they're going to put a tax on it. So that it's a capital good that has gained in value, and so therefore it's a tax. Yeah. That's probably the easiest one to think about. And as you saw, or you may have seen in the slides, it can be any asset. You can apply it to any asset, and just depends on the government as to how they write the law. But it could be stocks in the stock market, it could be bonds in the bond market, gold in the gold, any physical asset that has a gain from the resale of it.
And nothing happens if you sell it with a loss, right? You just leave it. No, okay.
Yes, if you're selling it with a loss, you don't pay the capital gains tax, absolutely. So as you saw, the UK has a capital gains tax. There would be a number of people who would sell property in the UK at a loss because the market, at certain points, the market will be, I was going to say depressed, but then that sounds like a mental health issue that we all suffer from. So the market will be lower in prices, okay, because there's just less demand for it because the housing markets are too expensive. People can't afford. I don't know if you have seen the prices of houses at all, but one day you might be interested in such. Okay, we've looked into it here in Malaysia, and to buy a house that we would want here in Malaysia, sort of in the area where we currently live, we would need about 2 million ringgit. Thereabouts. Yes, stocks and shares, yes. Cryptocurrencies, potentially, yes. The difficulty with cryptocurrencies is because of the blockchain nature of them and because of the lack of central control of them, it would be difficult to try and track, right, and then account for the gains that are made, which is possibly one of the reasons why people like the sort of the blockchain sorts of currencies. The technology behind blockchain is amazing, okay, and quite revolutionary, particularly in production, but I think cryptocurrencies I'm a little nervous about, right? Unless they are cryptocurrencies that are governed by a central authority, right? And even then I'm still a little nervous about them. Okay? And people who proclaim them loudly from the rooftop, I see as having, a bit of an ulterior motive in promoting them, okay? Like the Elon Musk, sort of gentleman who loudly pronounced that people were going to be able to use Bitcoin to buy his cars. And they were establishing a credit line, so to speak, where they could use Bitcoin. But of course, at that point in time, he had invested a whole lot of money in Bitcoin. So as soon as he said that, all of a sudden there was an increase in demand for Bitcoin and the price of Bitcoin went up. Then a little while later, he then said publicly, now I'm cutting that link. There's going to be you're not going to be able to use Bitcoin to buy my cars. And the reason why he said that is because he sold all of his stock when it went up, right, in Bitcoin, and he made millions from it. Okay? So people who loudly proclaim cryptocurrencies tend to have an ulterior motive with regards to them. So I'm a bit sus with those. But yes, capital gains in particular can be used with stocks and shares, can be used pretty much any asset class. The difficulty is the regulation of it, tracking the gains from it. But if you've got a system that can do that, then yeah, it should be no problem to do that at all. All right, back to Nearpod. Am I still sharing? No, I'm not. I need to be sharing because sharing is caring. All right. Now, there was the capital gains tax, corporate taxes, so the company taxes. We're familiar with those. We've had discussions before about company taxes, and in America we saw a couple of years ago they decreased the rate for their company taxes. So you look at these and you kind of think to yourself, well, this is quite incredible, because Ireland's got a company tax rate of 12.5%, which is half that of Canada and almost half that of South Korea. So again, it's that idea, what do you think is going to happen? Well, businesses, you would assume, are going to want to move their money to Ireland, which is exactly what they did. So companies like Apple, right, headquartered their business in Ireland because it saved them a huge amount of money with regards to taxation. Yes, you can say, well, 39% in America, that sounds really high. And even if it's down to 37, 38, right, this is actually an old diagram, old one, that's still very high. But a lot of the businesses in the States are actually able to use their accountants to minimize the amount of tax that they pay considerably. So the businesses that do pay that amount are probably going to be quite small, right? 37% in Japan, 30% in Mexico and in Germany, and then of course 26% in, where did I say? Canada. You don't get stuck down there, Kat. Right. Okay. Now, by having the low corporate tax rate, Ireland is attracting lots of multinational corporations, and it was absolutely true. It happened. There was a huge boom. I don't know if you remember this. We were alive at this point. They talked about something called the Celtic Tigers, right? And Ireland was one of those economies that was really growing very, very fast. Okay? Too fast, it actually exploded a little bit. The bubble popped, but it was doing really, really well. There were lots of businesses that were moving to Ireland and creating a huge number of jobs. Right? As they do that, they're going to provide profits, they're going to provide work opportunities, businesses, products, right? All of that, and that encouraged businesses to move to Ireland, and a lot of income and tax revenue generated from it, and obviously the Irish businesses to stay in Ireland as well. Good. So those are two good case studies. All right, now, this should be the last thing that we look at today. The last thing that I want us to look at today, the difference between wealth and income. Right? Now, we've kind of hinted at this before, but these are two completely different concepts, income and wealth, and therefore they've got two different distributions. Right? Income is fairly straightforward. Right? It is quite literally the income that you earn, right? So it is the revenue that you get from your employment, so your wages, you might have rental income that you earn, interest costs, interest payments that you earn, etc. Lots of them. So we know income, we're very familiar with that, and that income distribution is probably easier to model, right? And easier to think about. Wealth is a slightly different concept because it deals with your assets. It deals with the value of what you own. So yes, money, absolutely. Any shares that you have in the stock market, the bonds from the bond market, houses, cars, boats, private planes, famous paintings, any asset that you own is part of your wealth. And that distribution tends to be more unequal than the income distribution because it's got all of these assets in it. And it's also more difficult for you to plot. It's more difficult for you to figure out what that distribution is because you're not necessarily going to know, how many cars and boats and the value of all of those that people have. And unless they volunteer that information, probably not going to know, right? So there is quite a lot of self-reporting that goes on with regards to wealth, which makes it a little bit less, perhaps a little bit less honest, maybe, and a little bit less real. But when people talk about income distribution, they quite possibly are meaning wealth distribution, because what they see is they see this. They see the cars, the houses, the money, right? That's what you see. So realistically, people, when they're talking about wealth, right, they might talk about income instead. And they might say, oh, you know, we've got to fix the income distribution. Well, you're using your income to buy your assets. So there is a direct correlation between the two, but not necessarily so, okay? If you're a high income earner, you may not have high wealth, okay? Because you might spend an awful lot of it, okay? And vice versa, if you have a lot of wealth, it doesn't necessarily mean you've got a lot of income. Right? You may have all of the assets, but you might not be actually earning anything from wages, rent, etc. It may just be that you are living within the wealth that you have. Okay? So yeah, the example, Bruce Wayne inherited a lot of wealth, but isn't necessarily making a high income from it. And we had this in New Zealand. We had farmers in particular who said that they earned zero income, but that they had a lot of wealth because their wealth was tied up with their farms. So they had, you know, multi-million-dollar farms, and that was their asset, and they were able to use the asset to get mortgages from the bank. They were able to use the assets to get personal loans, all of those sorts of things, but they would declare zero income, so they would pay zero income tax, right? And that's how that sort of works. So we talked about income poor but asset rich with regards to that, right? So if I stop the sharing there, so that brings us back to that idea again about those policies. So if you're going to put taxation on income, then that's going to have some different effects than if you're going to put taxation on assets, you know? And it's whether you're wanting to target the income distribution, which is perhaps easier to target and also easier to measure and to witness the effects of it, than if you're trying to target assets and wealth. That's a whole lot of a different scenario to try to target. And we're going to look at some policies where they have attempted to target wealth, and we're going to discuss the advantages and disadvantages of those, all right? And we're going to see that it's not quite as simple as it sort of first appears. Right, ladies and gentlemen, I think that we should wrap it up there for the day. You've got your, so please review the ideas that we've been discussing today, right? So task number 1, review the ideas we've been discussing today. Make sure you've got good notes about those. HL, be prepared for the fact that next week we will be needing to look at income taxes and marginal tax rates, okay? And that's obviously not for everybody. So there will be a segment next week that will be HL only. We're also wanting you to be working on your equity presentations, right? And you will be presenting those next week is the plan, right? Now, obviously it's the end of this week. We're going to be starting next week. So can I have a, you know, are you okay with your presentations? Are there questions about those? I had a few who came back onto the meet to ask questions. Are there any questions about them that you need me to answer, or are you okay with it all and you've got it well in hand and racing towards it in a good way? What do we think? All okay? Okay. So do feel you can ask questions if you need. Otherwise, that will be us for the day. I will say, hey, konera, and bye for now.
Thank
Bye,
you.
sir.
Thank you.
Thank you. See you.
Mr. David, can I talk to you?
Yes, certainly. Hold on a second. I will just stop that.
Sure.